Hello and welcome to BCR. Let's get your trading day started with the following financial news and market headlines.
The US dollar index is currently trading around 105, reflecting a modest decline in Monday's trading. As Federal Reserve Chairman Jerome Powell noted, persistent inflation remains uncomfortably high, which has helped keep the dollar stable. However, the weak employment report released last Friday provided hints that the cooling of the U.S. economy necessary for the Fed to begin cutting rates may have started. This could trigger further downward movement for the dollar. On Monday, the dollar rebounded slightly, trading just above 105.00. The U.S. economy shows mixed signs of development, with strong demand and a tight labor market indicating slow but significant wage growth, fueling inflation. Yesterday, gold prices surged to a high of $2,332 following weaker-than-expected U.S. employment data and escalating geopolitical tensions, which led to a drop in U.S. Treasury yields, thus supporting higher gold prices. Investors this week will be focused on speeches from the Fed and the preliminary reading of the Michigan Consumer Sentiment Index on Friday. Friday's U.S. employment data indicated signs of a slowing U.S. economy. The ISM Services PMI fell into contraction territory, and following this data release, the likelihood of a Fed rate cut increased, with traders anticipating a 38 basis point cut by year-end. Given the weak U.S. economic data, gold climbed to $2,332. WTI U.S. crude oil futures saw a slight increase on Monday following news of a potential ceasefire between Israel and Hamas in Palestine. The oil market will also closely monitor the U.S. weekly production updates, as production could potentially exceed demand. Oil prices closed lower last Friday, marking the largest single-week drop in 3 months as investors weighed weak U.S. employment data and the potential timing of a Federal Reserve rate cut. U.S. crude oil futures for June fell 84 cents, or 1.06%, to $78.11 per barrel, with a weekly decline of 6.9%. According to 3 sources from OPEC+, the group may extend voluntary production cuts beyond June if there is no increase in oil demand.
We hope you enjoyed today's market outlook. If you have any questions or topics you'd like us to cover, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news